What's up, everybody? It's Ted here with BodiesXWix. It is about 7 a.m. on the 20th of November. So just before the opening bell, we got about an hour and a half before that starts. I'm just going to do a quick run through of both uh, the S&P and the Nasdaq futures. So let's go ahead and get started. Here is the S&P mini futures. This is the monthly. As you can see, I have a breaker outlined for the smart money concepts. If you don't know what a breaker is, I would suggest going to Inner Circle Traders channel. I think it's month 4 that he has on his series of mentoring, and you can understand exactly what breaker blocks, order blocks, all that stuff is. Um, Now, what I've been doing to trade these is I've been using Tradingview through Apex Trader. There is a link down below that you can use right now. They're doing a 90% sale. You have a simulation first, and then once you pass the simulation, then you get real money from other people. You get funded basically. So I am still in the simulation. I am not funded just yet. Uh, Full disclosure, and also full disclosure, none of this is any kind of financial advice. This is all just my opinion on what's happening in the market. So as you can see, again in the monthly, we do have a run up in November, which I believe 2 years ago we may have had one of those too. Can't remember. But I remember in November a couple years ago, it may have been 2020, we had a really great month. Um, we're coming up to the bottom of that bearish breaker right now. As you can see, I have a bunch of things outlined right now where the current prices. So we can go to the weekly. I can kind of give you an idea on what those are. I do have a Fibonacci um, on the weekly uh, candle here, as you can see. Also, you can see the ellipse in the middle. Yeah, unfortunately, I can't do anything live on the chart, so these are all just snapshots I just took a minute ago. So just let you know. So that little green candle uh, next to the big one at the very end, where current time is, that's the current week. The one that I had the Fibonacci on is previous week. So I have a liquidity point above, right? Uh, that could be an area to where price wants to jump to. Now, the reason I have the ellipse located down below is because we have a 4-hour fair value gap, or actually that would be a weekly fair value gap. We have a bunch of fair value gaps in this area. We have a 4-hour fair value gap. Uh, the green candle to where the ellipse starts, that is a bullish breaker. Um, and then once we get closer into the daily, you can see more fair value gaps. Well, there's a fair value gap on the daily. And then once you get, I think I have one more here. Now you have the 4-hour fair value gap I have outlined here. So basically, there's two directions that this can go that I'm unsure of which way it's going to go. It could go up to the liquidity point, or it could drop down, try to fill at least half of this fair value gap. And just below half of this fair value gap, which is called consequential encroachment in smart money concepts, is the discount array. The discount array is, if you draw Fibonacci, is 62% or below, or 61.8 is what it usually has on the charts. That is part of the Fibonacci sequence. Now, uh, why I drew the Fibonacci where I drew it instead of way down below at the bottom is because you always want to put your Fibonacci at the previous low before breaking a new high. You don't want to put it just at the bottom or anywhere you feel like putting it. You always have to put it at the bottom of a sequence before breaking a new high. Okay, so that's what I'm thinking is possibly going to happen with the S&P 500. Uh, there are the futures of that. It could drop down and fill the fair value gap, possibly hit the discount, and then pick up buy orders and then move up. Um, or we could see a possible drop down into the 4-hour fair value gap and do what's called uh, an institutional order flow entry drill and just barely enter that fair value gap and then head straight for that liquidity point. Those are the two kind of situations I am looking at for um, the S&P. Now, the Nasdaq. Here, I didn't do the monthly. Right now, I just have the weekly chart laid out. We do have a weekly breaker, as you can see. Again, a lot of this is kind of I guess you could say, well, what ICT says is you put lipstick on it or put, objects on the chart to kind of designate where things are whenever you get closer to the current price. So, as you can see, I do have a lot of boxes in here. Those boxes are for once you get down, dig down, and drill down into those price areas. But right now, for the weekly, you can see that it came up, it touched the top of that bearish order block, and then it came down and closed about midway through that order block. Now, what that did is that created a break of structure short term, which is where you see at BOS short term at. That's what that means. It closed above the green candle that is outlined in green going across. That would be another bullish breaker, and what it could possibly come down and hit that and move up, but we'll have to see once we drill down even further. Let's go to the daily here. So this kind of is about equal somewhat to the S&P. The ideas for it I have anyway. Um, it's kind of set up the same. Uh, there is that. Let's go to the 4-hour just to show you. See here on the 4-hour fair value gap, uh, we do have basically right in the middle of that 4-hour fair value gap, which is called consequential encroachment, um, is right about where the weekly breaker starts, right? And right about where the weekly breaker starts, that's the bullish weekly breaker outlined in the green, right? Uh, you also have the 61.8%, which is the discount area. So you have both of those, all those lined up right there, and I have the price outlined around 15,729. So there is a possibility that it could drop to that area again, pick up orders below that in the discount area, and then move up. And then again, I have the Fibonacci set the same way. I have it set at a low previous to breaking a new high, right? You don't want to set it just at the lowest low. You want to set it at a low prior to breaking a new high. That's where you want to set your Fibonacci's to understand where your PD arrays are, right? Your PD, the PD stands for premium and discount, right? So I'm bullish on both of these, which is why I have discount arrays. If you're bearish, you're gonna have premium arrays, right? Because you're gonna look to those premium arrays to get to sell. So that's why I have discount arrays here, just at that 61.8%. And I think it's going to be somewhere around 15.7, or actually the 61.8 is 15.68850. The consequential encroachment is the 15.729 that you see over there on the left side of your screen. So again, it could possibly drop down, and if it does, it's going to take out sell side liquidity, uh, which would be where the lowest low is in the current consolidation point, and then move up. But then again, there's also that liquidity point above, right at the 0%, right? And it could want to move up that way and take out that liquidity. So again, I'm a half and half on both of these. I don't know which direction it's going to go. Um, as far as what we have going on this week, it's not too much as far as numbers are concerned. I think we do have unemployment coming out on Wednesday. That may be the best day to take a look at things. Unfortunately, that's the day I will be at work. So, the best day to trade, I will not be available to trade. Uh, but just giving you guys a rundown on the markets of the S&P and the Nasdaq futures of this week. Uh, that is all I have for you guys. So thank you for checking all this out, and good luck and good trading.